The high of Monday Tuesday contract was used to pair the sell order right here. On Monday we had the push down, then price action went all the way up. Here we have a run on liquidity, then price dropped. Perfect price delivery, perfect price action, perfect contract execution.
Hello guys, welcome to Tom's Capital, where we analyze and trade the financial market with facts and figures. To our returning subscribers, we say a very big thank you to you for joining the family, and if you are coming across the channel for the very first time, you're welcome. On this channel, we dish out great content on real institutional approach to forex trading using institutional data and trading facts, which is the real smart money trading. If this is the kind of content you like, or if you want to experience drastic improvements in your trading, you are in the right place. Like the video, subscribe to the channel, turn on post notifications so that you'll be the very first set of people to see our videos when we drop them. On this video, we are going to be discussing time frames, which you can already tell from the title of the video, Forex Timeframe Scam, how to avoid it and make profit. To trade Forex successfully, one needs a very sharp knowledge of technical analysis, which is basically time analysis and price analysis. These two quantities are represented on the chart always, with the price on the vertical axis and time on the horizontal axis. There are other quantities that go into technical analysis other than price and time, like volume and open interest. In this video, I'll be focusing on time analysis and price analysis. There are three smart methods of time frame selection. These three methods are based on facts and institutional data. The first one is time measurement cycle. The second one is trading session. And the third is futures and options contracts. Time and price are commonly represented in candlesticks. Candlesticks show price movement within a specific time period, which we call time frame. Like the chart presently is a 1 hour time frame. Each of these candles represent 1 hour of trading period. If you want to go into the 1 hour to see what actually happened within the 1 hour, then you have to go into smaller time frames like 5 minutes, 15 minutes to see the trading action within that 1 hour. Most trading platforms present traders with fixed time frames like the M1, which is the 1 minute time frame, the 3 minute time frame, 5 minutes, 15 minutes, 30 minutes, and so on, as you can see on TradingView. But are all these time frames significant? This is the question we need to ask ourselves. Why have all of these time frames to confuse traders? Which of these time frames are more important than the others? Which of these time frames do I need to analyze to get the very perfect view of price so I can trade and understand what is really going on in the market? What is the significance of these provided time frames, or should I say time period, in the market or in the time measurement cycle? Once you are able to answer this question, then you can filter out the time frames to focus on based on their significance. In time measurement cycle, 1 second, 1 minute, 1 hour, 1 day, 1 week, and 1 month, or in addition to that 1 year, are of great significance because these are the units that we use to measure time. Time is specific, while period is a range. As you can see on your screen, this first vertical line is representing time at this point, and the second vertical line is representing time at exactly this point. That's why I say time is specific. But for period, which time frame is, it represents a range between two times. Like you can see, the green horizontal line is representing period, which marks trading action from the first red vertical line to the second red vertical line, and that is what time frame is. 8 a.m. is time, 2 p.m. is time, but time frames like H1, D1 are periods of 1 hour and 1 day respectively. In forex trading, both time and period are very useful. Like London Open, New York Open, economic data release dates and time are application of time to trading. In price action analysis, we use period. We analyze the price movement within a specific period, like right here. From this time to this time, what did price do? Was it bullish? Was it bearish? Was there any impulsive move? Those are the things to analyze within that period, that is time frame. Personally, I focus on highs, which is right here, then the low, which is right here. Then I look at the direction, which is bullish in this case, because we opened here and closed here. So the overall direction is bullish in this case. That is the only thing I look for in the time frame. I mark the high, mark the low, then I look at the direction. I compare it with the previous period. Using that comparison, I can determine where the market is headed, what is really going on, if profit is being taken or the market is ranging or whatever. Although generally the open, the close, high and low prices are considered. This is almost the same thing as what I consider. The only difference is that I combine the open and close price to give me direction. I use that as direction, not as price. Many traders confuse time for period, thereby attaching importance to all time frames. When you begin to see time frames as trading period, then you will realize that time frames like M2, M3, M30, H2, and many others are of no significance. Other time frames to analyze that are not listed on the trading platforms are Asian session, London session, and New York sessions. Many traders don't take time to analyze these time frames because they don't see it as time frames. In reality, price action within these time frames are of great importance to understanding where price is headed or what price will do in the next session. The high price and the low price of these time frames serve as liquidity pools for entry or for targets. The direction of the market in these time frames when compared also aid in direction analysis. As you can see in the illustration, in Asian session we had a range. The low of that range was used as liquidity for entry in London session. Then in London session we had a bullish run. The high of London session was used as liquidity to cause the retracement down into the demand zone created in London session for the continuation bullish move in New York session. This is how to use these time frames, which I call the session time frames. Now to the last and most important time frame selection for Forex analysis, which is futures and options trading contract period. The futures and options market through the CFTC, which is Commodity Futures Trading Commission, is well regulated and relatively centralized, unlike the forex market. The biggest players in the financial market are all in the futures and options market. The futures market is traded in contracts, which last for a specific period of time. These periods are important time frames to analyze. The contract periods traded in the futures market include yearly contracts, quarterly contracts, monthly contracts, weekly contracts, intra-week contracts, daily contracts. The yearly contract is usually opened at the beginning of the year and ends at the end of the year. The quarterly contracts are opened in every quarter. So the first one comes in March, it closes in June, and the new one opens in June, closes in September. New one opens in September and closes in December. So the quarterly contract months are March, June, September, and December. This time period between December and March and June, June and September, September and December are very, very important to analyze in the financial market. It helps you to determine what the big players are doing, and that helps you to know where the market is heading to. I know some of you may be thinking that the forex market is not the futures market, that the data from the futures market does not affect the forex market, and so on. But in reality, the forex pairs are direct reflections of the currencies in the futures market. The euro US dollar is a direct reflection of the euro in futures market. The pound US dollar is a direct reflection of the pound in the futures market. Here is a chart of the euro from the futures market, and beside it is the chart of the euro US dollar from the forex market. Look at the two. The only difference is that the asset being traded is written as euro on the futures market and euro against US dollar on the forex market, but the price action is exactly the same thing. If there are going to be differences, it's just going to be very, very minimal. Personally, what I do is I trade with the futures data because it is more reliable, it is centralized. The brokerage firm is CME. It's unlike the forex market where you can have millions and millions of different brokers. Using the contract period as time frames to analyze, we have the yearly, the quarterly, monthly, weekly, intra-week, and daily contracts. I already spoke about the yearly and the quarterly. The monthly futures contract does not really start on the first day of the month. So the monthly contract starts on the first Wednesday of the month and ends on the first Tuesday of the next month. The weekly contract starts on Monday, ends on Friday, but because the report of the futures market, which is submitted to the CFTC, is always submitted at the open of market on Wednesday of every week, that means Tuesday is usually the close of the week for the futures traders. So that means if you want to analyze your weekly time frame, you should be analyzing from Wednesday to Tuesday close. That is Wednesday open of one week to Tuesday close of the next week. That way you're going to see the reason for every action in the market. Then because the normal week starts on Monday, that is why we have the intra-week contracts. The intra-week contracts are just two. We have the Monday Tuesday contract, then the Wednesday to Friday contract. We have this also as time frames that we can analyze. So we can analyze Monday and Tuesday trading, then we analyze Wednesday, Thursday, Friday trading. For weekly time frame, we analyze price action from Wednesday open to Tuesday close. Now let's see how it affects price action. From the 5th of June 2022 to the 7th of June, this is just like the example I gave when I was illustrating the session time frame. You can see that Monday, Tuesday price action gave us a high price. Then, so for the second half of the week, price used the high of Monday, Tuesday contract as liquidity to pair the sell order for the week. The high of Monday, Tuesday contract was used to pair the sell order right here. On Monday, we had the push down, then price action went all the way up. Here we have a run on liquidity, then price dropped. Perfect price delivery, perfect price action, perfect contract execution. A whole lot of people don't even know this is what is going on in the market. Time frame analysis is what you need to time your entry, to time your trade such that you don't get in too early or you don't miss the opportunity. So this is going to be the end of the video. I'm going to give more examples on this as we continue. I don't want the video to be too long, so I'll see you in the next video. Please do like and share the video. Let it get to more people. We need to build the family. We need to help as many people as we can help to become better traders. This is going to be the end of this video. I don't want the video to be too long and boring. I know learning can be so boring sometimes. In my subsequent videos, I'm going to be putting this into practice so that you can really see it play out in the market, and you'll understand what I mean by time frame analysis, how to select the right time frames and how to use it to execute your trade. Personally, I focus more on the contract periods. It's supported by data, it's supported by the Commodities and Futures Trading Commission contract. It's supported by the COT data, unlike the time measurement method. The time measurement cycle method is also good, but I don't really focus much on it. I focus more on the sessions and the contracts. Those are very, very, very good ways to select your time frame or the time period to analyze, and they play out really, really, really perfectly.